Yesterday, I warned you guys this could be nothing more than a trap with the stock market breaking out this rising wedge. However, is that the reason stocks were crashing today? And we saw more fear started creeping into the market. At one point today, we saw the fear and greed index all the way over into extreme greed territory. Now the pendulum is swinging back. Now we come over and look at how the indices fared across the board. The Dow was down 324 points. The NASDAQ was down 187 points. S&P 500 down 44.5 points. Russell 2000 up 0.17. Now we look at advancing issues versus declining. Today there is 54.6% of issues declining on the day. Then when we come over and look at the sectors, we can see energy and technology, the big laggards of the day. Now, as we come over and look at a chart of crude oil real quick, which is why energy was lagging today. Look, we gap lower, we spiked a little bit lower. Now we did start to come back a little bit higher. Now, why was crude oil down so much? And if we come over and we actually look at this on the 30-minute chart, notice this all happened after 4 p.m. on yesterday. Well, it's very simple. You look at this article right here. Israel basically said they're not going to strike Iranian oil sites or their other site. However, Benjamin Hitt's Biden admin says Israel, not US, will decide how to handle Iran. Now, we come over and look at the VIX today. We can see the VIX gapped up, came down, then later on after the US session opened up, you see the move on the way up. If we put this on the 5-minute chart, you can basically see just chug, 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 chug. Then towards the very end, we started to get a little bit relief in the VIX. However, what if I told you this is not the reason why the market came lower? Now, I do think the VIX being elevated could be a sign that Israel is on the verge of possibly launching some type of offensive against Iran. However, when we come over and look at the technology sector, which was one of the other weakest sectors out there, notice what we did today. We closed the gap on the way down, big bearish engulfing candle on the way down 2.1%. If we look at why it was down, chip firm ASML plunged 15% after warning of weaker China sales in early release. And then we come over and we look and it says, essentially microchip equipment maker warns of slower recovery. Now, if we come over and look at ASML, you can see right here at 1010, absolutely falling off a cliff after that news. Then we look at some of the stocks like NVIDIA. NVIDIA today, absolutely getting crushed as well. And we look at NVIDIA on the daily chart, it filled the gap. We have a little bit of a buying pressure on the bottom of that candle. However, is this the beginning of a more meaningful correction on the way down? We come over and look at Apple. Apple today was green. However, look at the huge selling tail on top of this candle. This morning, Apple gaps up higher, pushes up higher, only to come back down. You can see this even more evident on the 30-minute chart. Big spike up, only to come back lower. Now, if we come over and look at SMH today, SMH absolutely getting destroyed, down 5.38% on the trading session. So is this all blown out of proportion? Did the market move too far too fast? We look over here at financials real quick. Financials gapping up, having a selling tail on top of this candle as well. And we've been warning about the MACD divergence at play. Across the board, we're seeing massive divergences everywhere we look. Now, if we come over real quick and we take a look at the dollar index today, dollar index basically forming a spinning top type of candle, small body, wick on the top, wick on the bottom. MACD indicator still looks strong at this moment. However, with the dollar going higher, we would normally expect to see gold on the way back lower. However, if you look at gold today, gold was actually able to close up on the session, kind of a bullish engulfing candle. We do have a wick on the top, wick on the bottom. Now, something we want to watch for in gold. If gold starts breaking above 2709, watch out. We're probably going to run all the way for the ABC projection at 2782. Now, we come back over and look at the volatility index. It was up 4.3%. Now, we zoom this out. Is this the beginning? Are we going to see another volatility spike like we saw back in August? Or are we going to start to roll back over? That's going to be the main question. And again, we have multiple things to worry about. Not only do we have to worry about tensions over in the Middle East, but remember, we are now in earnings season. Now, tomorrow morning, we have a slew of earnings coming out. ASML official earnings should be out sometime tomorrow morning. Then after the bell, we have some earnings as well, but Thursday is going to be big. All right, we have Taiwan Semiconductor before the bell, followed by Netflix after the close. So again, we're going to start to see some more high impact companies coming out with earnings, and we're going to see what effect they're going to have in the overall market. Now, as we come over, look at the diamonds, the Dow Jones Industrial Average, look right here. We have already completed the ABC pattern on the way up. Now today we started to roll over a bit and look at the MACD indicator. Was it making new highs when price was? Absolutely not. Was that setting up? We have major divergence out there in the market. Then we dive down and look at the 30-minute chart and see we gapped down. We got back into the gap. However, we were not able to close the gap out today. Now, in case you guys are not aware, Apex has changed some of the rules. DCA will be back. No more payout windows. And if you want to make sure you get the best deal with Apex or with My Funded Futures, make sure you use promo code Mike at checkout. Then we look at the small cap. So Russell 2000 was strong today, up 0.21%. And you might say, Mike, this does not look strong. We have huge selling pressure on that candle. And when we look left, well, we have a swing point right here coming right into resistance. So I would say from a candle perspective, yes, this was bearish. But we look at this on the 5-minute chart. Notice as the other stocks were crashing lower, the small caps were rallying up. Then finally towards the end of the day, they got thrown out with everything else. Now, as we jump over real quick and we take a look at the QQQs, what do we got going on? We have a bearish engulfing candle. We were able to close the gap from yesterday. Then when we look out here, where are we likely headed? Well, you can see we have quite a bit of high volume on the composite profile, all down and around this area here, going anywhere from about 485.42 down to about 480.70. Now, when we look at the 4-hour chart, MACD indicator looks like it's just getting ready to roll over. We have huge MACD divergence once again. Then on the 1-hour chart, you can see we have a good separation of the lines, making a beeline, and now is down just below the 0 line. On the 30-minute chart, what do we have? Well, you can see basically we ran down and we just kept going lower and lower. Now, the last 30-minute candle did try to get a little bit of buying pressure in it. And when I look at the profile, I'm going to classify this as a B as in boy, a lowercase b. And what that signifies, if we get back above value area high, we're likely going to explore the upper third of the range. And one of the areas I would want to watch would be this structure breakdown point right over here, candle body to the candle wick. And that's going to be anywhere from 495.25 up to about 495.71. However, if we start breaking back below value area low, or if we get above value area high and we start turning back lower, watch out. We're probably going to rotate through all the volume profile levels on the way down. Then let's not forget, we still have a gap all the way down here at about 482 or so that needs to come back and get filled at some point. Is this going to be the push? Will we see Israel go on the offensive and create more volatility in our stock market tonight? We come over here and we look at the futures markets. What do we got going on? Well, on the 4-hour chart, this white dotted line is a level that we gave out during part of the pre-market prep at the beginning of today's live stream. And if you guys want to make sure you don't miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. Now you can see as we came into that area, we normally expect the market to bounce or consolidate. You can see right now we have kind of a hammer-ish looking candle. So now the question is, do we start to push up and out of this area? Now, as we come over and look at the daily profiles, notice today we made it all the way down to S2. Now the question is, are we going to start to get a relief rally on the way back up? Keep in mind, we do have a couple areas of interest right in this zone right here. This is going to be a minus development area, which comes in at 449. All the way up here to about 464. However, if things start to get bullish tomorrow, we have another structure breakdown point right up here, anywhere from the ballpark of 562 to about 568. Now, am I in the camp where I think we're going to make it all the way up there? I'm not sure. It's going to depend on, does Israel stir up more conflict in the Middle East or not? Now, if we grab our Fibonacci retracement tool and we measure from today's high down to today's low, notice a 50% retracement comes in where? Right within that minus development area. So barring any escalations over in the Middle East, I do think at some point we can make our way back towards that area. Now, as we look at the volume profile levels, notice we are closing below value area lows. So what does that mean? Tomorrow or the following day, we are likely going to come back and test that level, which comes in at 20,371.25. The point of control is way up here at 20,628.75, with value area high being all the way up here at 20,659.25. Now, if you're thinking about playing the rotation on the way up, one thing I would caution on, usually the point of control is target number 1. Instead, I'd like to target the first minus development area, maybe even this second minus development area over here, and that structure breakdown point before targeting the point of control. And again, that's just the way I'm looking at the markets. Now, when we come over and look at the SPY today was able to go ahead and close the gap. However, when we look at the SPX real quick, notice we talked about this yesterday. We had that rising wedge. Is this nothing more than a trap, or are we going to go higher? Because if we go ahead and we were to draw this out, and we did this today on the live stream, and we just basically measure something like this, take that swing point there, we go right up here towards the breakout point. Notice where we come to. That is enough to more than complete the ABC pattern on the way up. And that actually gives us right above that 6,000 price target that Mr. Tom Lee is talking about. Now, when you jump back over to the SPY real quick, notice we talked about we filled the gap. However, to the downside, we do want to watch 571.31. It's kind of the high volume area right here on the composite profile. On the 4-hour chart, not a lot going there. MACD looks like it's getting a little bit weak. On the 1-hour chart, MACD indicator is already crossed to the downside. Then as we come over to the 30-minute chart, notice the MACD indicator is already below the zero line. And what we want to start looking for, if you're looking to be a dip buyer, you want to see, can we come down here, have the MACD indicator start flattening out below the zero line? Then maybe we'll set up some type of double bottom, some type of divergence, and we'll see a push up. However, watch out because we still have targets to the downside. For instance, we have this gap all the way down here, somewhere in the ballpark of 567.84. That still needs to come back and get filled. And we put this on the daily chart. Let's just go ahead and be conservative. If we were to measure Fibonacci retracement of the last leg up, the 50% level takes us to about 575. And that would be a normal retracement for the S&P 500. But what if we went ahead and we took this whole leg right up in here? Notice where the 50% level comes in. That would be right around 561. Now, if we measure from all-time high to 561, that would be about a 4% correction for the S&P. And again, nothing would be crazy about seeing a 4% correction. Then as we come over and look at the futures markets real quick, here's a minus development area we drew out in the pre-market prep this morning as well. Notice we almost made it down there. Not quite. We almost made it down there. We'll see if we can go ahead and flush that level out tonight. Now, when we come over here and we look at the daily profiles, notice we basically sold off. We just kept grinding lower, lower, lower. If you guys joined me on the live stream today, you saw I got absolutely crushed in the morning session. However, I was able to get it back by the end of the day, and you guys were able to see all the trades that I took in order to get it back. Now, if you notice, value area low is going to be right down here at about 58, 57 and a quarter. The point of control is going to be up here about 58.84.50. Value area high is going to be all the way up here at 58.97.50. So if you're looking to play a bounce in the market, where would be some logical targets? Well, two of them jump out to me right now. This little minus development area right here. Then the secondary minus development area right up in here. Now the first area is going to be about 65 all the way up here to 66. The next area will be 71 up here to about 73. So those will be the first two targets. Anything above that, I would then look for that point of control to come back and get tested. And then maybe even value area high. Right above value area high, we have that structure breakdown point along with this minus development area. So here's what I want to do. I want to mark off anywhere from about value area high to these candle bodies right up here as a potential zone, as long as we have no further escalations going on in the Middle East. Now, if you guys like to learn a better way to manage risk when trading with prop firms, make sure to watch this video right here.